everybody, it's Kyla. Welcome to my channel where I talk about the stock market and the economy amongst other things. Today, I just wanted to really quickly talk about the Federal Reserve meeting, the FOMC meeting, and what they ended up deciding. So the Fed raised rates by 75 basis points today in order to fight inflation. The Fed has a dual mandate of maximum employment and price stability. Right now, most of their focus is on fighting inflation, managing price stability, with the goal of managing employment coming down the line. Jerome Powell did say today that the labor market was going to have to soften a little bit in order for inflation to come back down. In the press conference, Jerome Powell basically highlighted that they are somewhat invoking a recession here in order to prevent a future recession. They released the summary of economic projections, which showed that they expect unemployment to increase and growth to slow, which does relate a little bit to a recession or at least a bigger slowdown than what they were probably anticipating. Price stability is the main goal here, and they will not stop until inflation is moving down to about 2%, which is their target. They're going full fast and furious mode, with rates expected to hit 4.4% by the end of this year. Rates are expected to hit 4.6% in 2023. It doesn't look like they're slowing down anytime soon. Basically, this was a more hawkish move than markets expected, more hawkish move than I think a lot of people expected, and the Fed is going to keep going at it until the job is done. Jerome Powell kept on saying that. He was basically like, if you're confused stock market, if you're confused investors, go listen to what I said at Jackson Hole. I'm going to keep on doing this until inflation is back down. That is what the Federal Reserve cares about right now. Essentially, this is going to require them to do a number on the labor market, causing unemployment to tick up, rising to 4.4% next year. They're going to keep on raising rates for a while. They're going to stick with it and not ease even as the labor market weakens, and they don't expect core inflation to get back down to around 2% until 2025. They're not selling assets off the balance sheet, so it's not super restrictive mode. They're really battling inflation expectations, how people think about inflation. And what's interesting about the summary of economic projections is that they actually expect to cut rates in a few years, at 2024-ish, with unemployment moderating, which is a big deal. They see this working and that the economy will remain relatively the same-ish and somewhat okay. Of course, nobody knows what is going to happen. You can see the dispersion on the dot plot for that. The Fed is really moving fast and furious on this monetary policy stuff, and the worry is that they're moving a little bit too fast before the economy can kind of price all that in. I talked about that in my recent video, so you can go and watch that if you want to hear a little bit more about what it looks like to actually incorporate monetary policy into the economy. But basically, the labor market is strong right now. That gives the Federal Reserve a little bit of leeway to do what they want to with rates, right? To do what they want to with tightening. If the labor market begins to substantially weaken, you will probably have to see the Fed slow down. So Jerome Powell at the end said the path that we actually execute will be enough. It will be enough to restore price stability. He also said, I wish there was a painless way to get inflation down, but there isn't. This is what the Fed does, right? They raise rates and they shrink the balance sheet and they speak. And that is three of their tools to managing the economy, to managing inflation, how they talk about it, how they impact financial conditions, and how they impact borrowing costs. And right now they're kind of going hard in the paint on all of those. The question will be, when will the Fed slow down, and when will this really start to get incorporated in the economy? Is it already priced in, or is there more pricing in to happen? And of course, there are consequences to this too, which I don't even want to gloss over. People losing their jobs is horrible. That is the cost of the Fed's way of doing monetary policy in general. That's what happened. The Fed raised rates by 75 basis points, and they're likely going to keep on raising rates. They're going restrictive mode, nearing that, meaning that they're willing to take on quite a bit of economic weakness in order to slow the economy down, which is their way of managing inflation. If you like this video, go ahead and hit subscribe. I'm on TikTok, Instagram. I will be writing a newsletter about this weekend, so go to kyla.substack.com for that. The video will be out next Monday. I hope that you all are doing well, and I'll talk to you all soon. Bye.